So welcome everybody and hi guys from a very, very cold Cape Town. I think this cold weather has gripped the entire country. So I hope you're not having load shedding right now and that you're sitting next to a warm heater. So this is our second Money Makeover live event where we get to chat to you guys and answer your questions as part of this Money Makeover journey with our 6 candidates. This month, I decided to focus on car finance because cars are such an important aspect of South Africans' lives. And I see it come up every single year as a theme in Money Makeover, whether it's somebody looking to purchase a car, or maybe it's somebody who's just struggling to meet their car repayments and has to make some decisions about whether to exit that car or downgrade or all of those things. And the thing is that in South Africa, a car is actually a necessity. To be honest, I just have to look at the taxi violence around us here in Cape Town to realize that, public transport is just not always an option. But there is a very big difference between buying a car to get you to work and buying a car that puts you into financial difficulty. And then the car that you purchase can also have an impact on other financial goals. So now this is an example with Nakawe and her husband, one of our candidates this year. They can afford the car finance. That's not the issue. The issue is that they've realized that this is money that they could be investing and building wealth with. And is this really the best use of their cash flow? And then we've got Audrey, who is got a balloon payment coming up in a year's time. She doesn't want to sell the car. She wants to keep it, but she now needs to decide how she's going to settle that balloon payment. So these are some of the themes that we're going to be covering tonight. And you are more than welcome to please post your questions in the comment box so that we can answer them. And when I say we, I would like to invite or welcome Fulufhelo Mandane, who is the head of dealer relationships at Absa Vehicle and Asset Finance. So welcome, Fulufhelo, and thank you for joining us and helping us answer all the questions from our viewers.
So thank you, Maya, and good evening to you and your viewers tonight.
So I'm going to kick off right away. Because this is I'm going to ask the questions that I know so many people send to me. So I'm pretty aware of of a lot of the questions that are going to come up. But I think for me, what a lot of people don't understand is the choice of financing, how long you finance for, whether it's over 48 months or 72 months, and whether or not you have a balloon payment has quite a significant impact on the break-even value. The day that your car is actually worth what you owe on it. And this often makes it very difficult to trade out of. So maybe you could just give us a few scenarios around that. And what is the best way to finance your car? Over what time period?
Yeah, I think, Maya, maybe just to first explain the break-even value. This is the point at which your vehicle's trade-in value matches the amount still owed to the bank. When you achieve this point, it is usually considered that most guys will consider this as the best time to trade in your vehicle because you get good value out of your car. And trading your vehicle before this period may result in you having to pay in an amount on your finance contract as the value of your vehicle has depreciated faster than the amount you have paid on the loan. But having a balloon payment means your break-even point will be achieved later during your finance period, as your monthly installment comprises the capital and the interest, which is calculated on the total loan amount. With a balloon payment, you must settle the balance before you are able to take ownership of the vehicle at the end of the contract or when you sell it, which is sometimes not many people understand that once you start finishing your term with a balloon payment, it just doesn't stop. You need to continue paying, or you need to make a plan to actually settle that outstanding amount on the balloon payment.
And I must say, sorry, just I had a really interesting question the other day, and that talked to exactly that. Someone said, well, I've settled my car finance early. Do I still need to pay the balloon payment? Yes, that balloon payment is still owing.
That's it, yeah. That's it. So if you do settle your vehicle early, the term would have been based on the amount that was borrowed to you as a consumer. So which means you still got that amount that you put in as a 10%, 30%, which can go as high as 40% if you want to. that amount still needs to be settled, right? So if you don't have the upfront cash to pay for it, you can, I don't know, you can continue with the term or extend the term. The bank will normally just extend the term for the remainder, which you can obviously make it over 12 months or 24 months or even longer if you want to, so that you can settle the remainder of that amount. So instead of owing the vehicle for 7 years, or if you would have thought that you only own the vehicle for 7 years, then you must add in the other amount, because that's still going to come up, right? Unless if you've got some extra cash that you've been saving over the past few years while you bought the vehicle, that can be equivalent to whatever the balloon amount is at the end of term, then you can use that money just to pay it off as a lump sum.
And, you know, I remember looking at some scenarios, I'm trying to remember off the top of my head, but it was quite a lot. It was the sort of that if you financed your car over 72 months, and I'm talking about not even a balloon payment, you don't have a balloon payment, I think you still owed more on your car than it was worth for the first 3 years. It's quite a significant, and I think, again, that's what a lot of people don't realize, is that, you know, because so much, your car depreciates immediately. You drive it out the showroom, right? Drops like what, 25% on average in your first year, and then you've got all this financing that you still have to pay. So people don't realize that when they buy a car and they're financing it over a longer period of time, you can't just trade out of it. You're kind of stuck with it.
Yeah, and maybe, Maya, we also do understand that most people are finding themselves in all sorts of difficult situation right now. And if you consider what's happening to the economy, if you consider the cost of living, etc., so most of the people will go for that maximum 72 months, which is what we're picking up right in our business. And well, if you can, if you've got some extra money, it will not hurt for you to put in that extra amount of money into the vehicle payment, so that you can finish off earlier and you can actually catch up with that break-even point much earlier. But if you can't, I mean, 72 months without a balloon, in most cases, it's not too bad. It's the most common way of financing. If you can put in a deposit, even better. Because then it just means that you're borrowing less from the bank, right? Because now you're just going to borrow whatever the difference of the deposit that you put in, that would be what would be financed, which also helps out. So in most cases, people will do that because they want to pay less installment on a monthly basis. But if you can afford to pay a deposit, or if you can afford to pay a bit more money into the account, do so, because it does really help.
So it's interesting you talked about the deposit. I was actually running the numbers, and I found that say your installments were going to be 5,000 Rand a month or whatever, and if you actually postponed that purchase by 6 months and you saved that 5,000 Rand a month, you would actually, and you put that down as a deposit, you would pay off your car a whole year earlier, so that you wouldn't have to finance it over 72 months. I think you would be able to finance it over 60 months. So that deposit is so valuable. But I have to tell you, Fulufhelo, I hear this all the time, and I want you to tell all the people watching, because you are head of dealer relationships, so they're going to believe you. I hear over and over again telling the people they're selling the cars to not to put a deposit down, because because a deposit will worsen their interest rate. So they say, if you put a deposit down, you're not going to get as good an interest rate. Is that true?
Yeah, well, that's unfortunate, because maybe if I can answer your question in two ways, because there's two elements into this question that you've just raised. One is, do you get a better interest rate if you pay a deposit? That's not really true, right? Because the rate you pay is more dependent on the customer's risk rate than it is on the deposit. So how you conduct your bank account, how you conduct your other debts, etc., is actually what affects your scorecard, your scorecard. I think most people see this ads around what's your score and all those things. That's what mainly affects your interest rate, not really your deposit. And does paying a deposit reduce your interest? The smaller your loan amount is, and the shorter your loan period is, the less interest you will pay, because obviously now you've actually shortened the entire period and you're borrowing less, etc. So it does help in that way.
So it actually helps to put down a deposit, whereas the dealers are telling people not to put down a deposit. So I think that's quite that is a set.
Yes.
And as we know, there is obviously an incentive for them on the financing side. So I think we need to empower consumers to question them and ask for quotes and say, show me the 2 quotes, one with the deposit and one to prove it. Would that be a good strategy?
So maybe Maya is also, it will not help with interest rate per se, but it does help with the interest amount that you pay. I think to put it much more simply. Yeah.
Absolutely. So we've got some questions coming through, so I'm going to start answering those. I've got more of my own, but I'm going to think it's fair to share. so Gugu's asked, should I take a car finance with balloon payments and use the extra money I would have been paying towards the car and other investments that will bring me more money? So what you're saying is, Gugu, as I understand it, is, maybe I should be investing and keeping that balloon payment, but I don't know if that makes sense because the interest rate on a car loan. What is your opinion, Philip?
Yeah. So I guess the main thing is that the fact that you've got a balloon payment on your vehicle, you must also remember that I mentioned earlier that your term is going to be longer, so it's going to take longer for you to actually own the vehicle if that's what you want. Your break-even point is also going to take longer, which is not necessarily a positive thing. And remember that the interest charge is going to be much higher because you actually paying this vehicle over a longer period, etc. So now you just need to weigh in is that investment amount that you're putting into the bank, are you going to get so much interest that it outweighs the cost of the loan that you're actually taking up on the vehicle finance with a balloon? I think that's where now you just need to contemplate which one is going to work out better for you. But it's not always, if you can afford to actually put in a deposit on the vehicle, rather do that. It actually works out better for you. If you don't want to put in a deposit and you just want to do the straight line loan, rather do that because at the end of the day, you're paying money on that money that you're borrowing from the bank.
Absolutely. And I think just another very interesting one is that, if you borrow money from a bank, they compound daily. The interest compounds daily. And if you deposit with a bank, it actually compounds monthly. So no matter what you're always going to be paying, is always borrowing from a bank is going to cost you more than depositing with a bank, so that you're going to make from a deposit. But there's a great question here about affordability assessment. So I'd like to ask about the affordability assessment criteria. How much in terms of debt to income ratio must I currently have to be able to get a good chance to be approved for vehicle finance? How does Absa assess somebody?
Okay, and that's a very good question, right? So in most cases, obviously, we want you to have a good income, right? So in most cases, we'll also look at the minimum income that is acceptable for you to actually do vehicle finance. And obviously, we are aligned with the National Credit Regulator in terms of what's acceptable within those standards as well. So we can't go out of line with those things. In most cases, we'll also look at things like your conduct of your previous accounts, your conduct of your current debts, your conduct on your current account, etc. Because that just shows whether you are for lack of a better word, maybe reliable person, where if you're given money, can you actually conduct yourself well? Can you repay, etc.? And then we also don't want to obviously over indebt you in a way that we give you so much debt that you can't even pay for your basic needs as a human being. So we'll always look at that percentage to say at least you must still have a remaining percent of money that you can use for day-to-day chores. I think what most people don't understand, Maya, is that when you're buying a vehicle, in most cases, it's not just about that installment amount that you're buying, that you're going to be paying on a monthly basis, right? You still got your insurance that you need to worry about. You still need to look at your other value-added products, which are very key in today's age when we talk about your warranties on the vehicles, if it didn't have one when you bought it. We saw now with COVID-19 how credit life became very crucial for most people. You have to worry about things like your maintenance of that vehicle, petrol, and those are key stuff that needs to be considered when you buy one. So you being able to say, I've got an installment that I can pay, I'm happy with that. Think about all those other stuff that you need to add in so that you can actually enjoy your vehicle and you can find the vehicle to be affordable and in a way that even when tough time comes, you are able to manage the situation because you've got that gap right, of income that you can still play around with, and you don't have to worry about letting go of your vehicle because you can't afford it any longer.
I think it's such a critical point that you raise about fuel and insurance, because I think often people forget to factor that in. They go in and they look at, I can afford. So if you say I can afford 5,000 Rand a month, you actually can probably only afford an installment of 3,000 Rand a month. The other 2,000 Rand needs to cover fuel and insurance. And, one of the things I'm seeing so much of, because I get the questions when people have crashed into someone and they're uninsured. So we're seeing people lapsing their insurance because they're struggling with their repayments. And then your life becomes, let me tell you, one, because the insurers are not letting you off the hook. If you smash into one of their clients, they are going after you. And we're seeing that quite a lot. So I think that is really key. Lloyd asked a great question, actually. Lloyd, thank you, because I have that as actually one of my questions too. So I'm going to, can the balloon payment be revised and incorporated into your monthly installment by the bank to avoid that final payment? And that is a question I'm getting a lot. So people are saying, oh, I didn't know about balloon payments. I didn't realize this wasn't great. I didn't think about it. How can I start to pay off my balloon payment in advance?
There's a few ways, and maybe just to start with the point around, I didn't know about the balloon payment that I had. It's interesting that you brought that up, because it becomes very difficult where at the later stage where a customer says, I signed this contract and I didn't know there was a balloon payment, and all we know is that if you are buying a vehicle from the dealer, there would have been an advisor, or we call them F&Is, that will help you through the contract. And all this information will be in the contract. So it becomes very important that when you signing for that new car, because it's an exciting moment, right? You actually take time to actually go through the contract, because most of these details are actually stipulated upfront on the contract. Around, can you incorporate the balloon payment on the vehicle? Yes, you can. But if you actually think about it, that you've signed a contract which said you've got, the bank is lending you 500 Rand, and 20% of that 500 Rand is going to be a balloon payment. So which means you're only going to lend a certain amount of money, let's say 300 Rand or so. So that 200 Rand that you've got as a balloon payment, it's contracted into the existing contract. So if you want to incorporate into or change and restructure your contract, you can do that, but we'll have to review or reassess your contract again to also check affordability again and those kind of things, because you're now going to be impacted in terms of installment payment. If your installment was 6 Rand then, and you want to now incorporate everything and take a full debt of 500 Rand, it will then mean that you're going to be probably paying about, let's say, 10 Rand as an argument, for argument's sake. And that's a different amount. So we have to recontract and give you a new contract. Alternatively, you can look at options of paying your vehicles much quicker, as I mentioned earlier, putting more money into the vehicle account, and then as time goes on, you can now restructure your deal again to incorporate all the full amount. So there are options that are available. The key here is, when a client is going through a situation, or they feel that, maybe I do not need this balloon payment, instead of waiting, always reach out to your financial institution that did the finance for you. We should be able to assist you at any time.
I think it's actually very important, because it's another question I do get quite a lot, is about advance payments. So if I pay an extra, can I allocate that to my balloon payment? And I know that Absa does allow it. So with Absa, you can, if you've built up an amount, you can actually contact Absa, if that's who your finance house is, and say, please add that to my balloon payment. However, not all finance houses do that. So you do need to find out how each of them works. So I think Absa is one of the ones that you can do that. You can actually advance it. But I suppose the other thing is, that's what we're seeing Audrey doing now, is she's just saving in a savings account to make sure that she's got the lump sum available. But of course, what you get in a savings account, as I said, maybe you're getting 4%, whereas your financing is 12%. So being able to pay that money into the vehicle finance every month does really does help. And then we had a question here, Londolani. Would 10,000 or 15,000 rand lump sum to the loan make much of a difference? And I'm actually talking here about a deposit. So like, does it make that big a difference? Anything makes a difference.
Yeah, I guess any amount makes a difference, and again, might also depends on the debt amount that you're gonna be going for. I mean, if you're going for 120,000 rand car, and you print 10,000, it does make a difference. But if you're going for a 2 million car, obviously it won't make much of a difference in terms of the actual amount. But you know what, any amount that you can put up front, if you really don't want to see yourself stretching your debt amount for too long, do it. Rather put it in so that you can get it done earlier, and you at least know that you own your own vehicle. And in case for some people, if you want to upgrade your car later, at least you know that you've got something that you can take in trading, which goes in as a deposit again, and then you can get a better looking car much earlier than waiting for later. Yeah.
So it's quite interesting. I happened to be looking at I was doing an article on it, and I did look at a 200,000 rand car, putting down a 26,000 rand deposit, because that actually pays your car off a whole year earlier. So that's the difference. Again, it is a quantum. It's a million rand car, and the 26,000 it wouldn't be a year. It would be, but you really do pay your car off quite a lot quicker if you put down a deposit. Is it a good idea to buy a car from an auction? Are you comfortable answering that? Seeing you work with all the dealers.
Yeah. No, that's fine. You know, everything comes with its own pros and cons, right? So if you want to buy a car from an auction, just know that you're gonna get the car at footstool, right? Which means that you get the car as is. So if there's something wrong with the car, you can't take it back. You can't now go and depend on CPA and say, but I bought the car from you, and say those things don't work. So if you are willing to take that risk, you can do it, but obviously you must have a firm understanding of the vehicles that you buy. You must also have a firm understanding of the implications that you can happen. Also understand the risk as well, right? So one can't say don't do it, but just understand that it's far much more riskier for you as an individual, if you're not a dealer or you're not doing it for trading, for you to actually buy there. Where else, when you're buying from the dealers, reputable dealers, is that they would have done a full check on the vehicle, and you've got protections obviously from the regulatory side in terms of CPA, etc. So which means that if anything goes wrong and you've bought the vehicle from a reputable dealers, you've got something to actually go back to. Where else with the auction house, you don't have that.
Yeah, I mean, I've known people who've been very successful buying at auctions, but they're new cars. They could actually check the car themselves, and I certainly wouldn't. I wouldn't even know how to open, I'd look inside and I wouldn't know what's going on. That's very true. We always buy secondhand. I don't have car finance, I'm afraid, Absa. But we actually check the service record. And what's great is nowadays they're all computerized. So they actually give you the computer readings from those cars, and you can immediately see if they've picked up an issue before. So I think for me, going to the dealer, being able to get that car history, those service records, makes me more comfortable, I think. But yeah. And then Terence asked, with the goal to lower the interest repayments and the remaining installments on a car, is it a good idea to trade in your car for those reasons? I suppose you mean trade in and get a cheaper car. What are the pros and cons? I'm not sure.
Of trading in the vehicle.
Yeah, to try and perhaps lower your, I suppose trade in and get a cheaper car. Is that what you mean, Terence? Yeah. Maybe, I don't know. It's an interesting one. Do you? I
can try. I can attempt it based on what I've heard, Maya. So trading on a vehicle, if you've got a good trading, you might as well see it as a deposit, because it goes straight into the next vehicle. Especially if you're not owing on that car, it's a good equity that you can actually use to your advantage. Because if you can actually lower your installment, you can actually lower the interest repayment back, lower the term, and all those things on a much better vehicle that's pretty much newer. You might as well do it, right? Because it does make actually financial sense. In terms of trading in a vehicle that you still owe money on, that's another situation. It will always depend on all the things that we've been talking about right now: balloon payment, how long have you had the car for, etc. Because if you haven't reached that break-even point, or you haven't paid enough on the vehicle, you know that chances of you having equity on the vehicle is very low. So which means chances of that finance amount, including part of whatever is left off on the debt, is very high. So you're actually buying a new vehicle at a price which is far much higher than the value of the vehicle, which is not ideal. So in attempting to answer him, there are those two scenarios that you need to consider. If it's fully paid up and you feel that you don't need the vehicle, go for it. It's actually good for your new car as well.
One of the dangers I see with trade-ins, and I come in, is that people who owe money on it, they trade it in and they just keep adding to the debt. So the debt that they owe on the previous car gets added to the new car, and eventually you land up in a situation with this massive debt where you know you're never going to be able to pay the car off. So one has to be careful with that. But Terence, I know I definitely have run some numbers before, and where we looked at somebody who wanted to exit his car. He had a luxury car and he wanted to exit it because he was struggling, but he was going to have a shortfall. And we actually worked out that if he exited it, bought a less expensive car because of the less fuel and less insurance on it, as well as the lower payments, he was actually better off doing that, even with a personal loan, paying that personal loan off quickly. His net position was actually better to exit the car. So a lot of the time you need to do your numbers and see, because there are a lot of factors that you can consider. Zene asks this question, isn't a balloon necessarily deferred interest? Therefore, if I make advance payments, shouldn't that mean I'm lowering the balloon and therefore have nothing to pay at the end of the term? So I know it's interesting, it's not really deferred interest. You actually pay interest on that balloon. It's included in your installment. You are paying. But so I think in Absa's case, if I'm correct, so Absa, you can allocate the money to the balloon payment. But if, say, you were with another bank, what would happen is that you would settle it earlier. So maybe you'd pay the car off earlier, and then your installments would start to go towards the balloon payment. Would that be a correct assumption? Would that be correct?
That's correct. That's correct. Yeah. And I guess with the Absa scenario that you've just painted, Maya, it's important that when you're doing that, just inform us as an institution to say, listen, this is what I'm doing, because that money will just be going in and we won't know where to allocate the money. So it's always important that if you decide to do that, just give a call our call center or go to your banker if you're using a bank, and just inform them this is what you're thinking of doing and how should I do it, and they'll assist you.
Yeah, and I think it is, though, even if you don't inform the bank, it's still offsetting the interest. So you're still going to be saving on interest, which means your car will still be paid off sooner.
Yeah.
But I think just explain to me, because I also get a bit confused with this. So say my term was 72 months and then I had a balloon, but because I've been paying an extra, I settled it at 60 months, but I still have the balloon. I could, because my term isn't over yet, I've still got another 12 months in my contract. I could now just keep the same installments now going to the balloon payment. Am I correct? I wouldn't immediately have to pay the 60 months because I had a 72-month deal. Is that correct?
That's correct. You've got it on the dot. That's correct. Yeah.
Exactly it. So if you're paying an extra, you paid off by 60 months, but your contract was 72 months, you don't owe the balloon until the end of those 72 months. So you could then start paying off the balloon monthly. What if you get to, so I think you did answer this a little bit earlier, but if I get to my 72 months and I haven't got the funds for the balloon, I can refinance the car. You refinance the balloon. Terrible idea, but you can do it. Yeah.
You've got options. So you can refinance, and in some instances you find that because we know you as a client, when you come closer to the time, the bank will give you a call and let you know that, listen, this is what's going to happen, and then do you want to continue, and then they'll just make an arrangement for you to continue paying. It can be, and then you just need to decide on how long, right? So if you want to do 12 months, 24 months, 36 months, it's up to you. You can choose between those terms in which you want to continue paying the vehicle, and that's if you're keeping the vehicle for longer. But there are options.
And Gabby asks, rent to buy, is it a good idea? Now, I know that's not your business, but do you have any opinions on it? You know, these rent to buy, which is basically circumventing the National Consumer, it's actually circumventing the Credit Act.
So we're not playing much in that space as yet, and I think in South Africa it's not big in terms of the market and stuff. But maybe outside of South Africa it's something that's happening, but we don't have much of that. And in most cases, depending on who you're getting it from, and you also need to check those kind of things and make sure that it's a good value. Because at the end of the day, with going for such a big ticket item financing, it's always important to make sure that you're going one for an asset that is worth doing what you want to do with it, and number two, that it won't give you problems in the long run, because you end up sitting with a contract that you can't get out of, and then it becomes a problem, because then either that's going to go and impact your credit scorecard if you decide to stop without notifying anyone and stuff. So I would, because of the minimum knowledge on it, and the business in South Africa, I would actually suggest that maybe just do further research on it and make sure that this is something that can work for you. But if you then, if you're doing rent to buy because you are in a situation where you not sure whether you want to keep the car for long, or you're not sure whether this is the car that you want to keep afterwards, there are other options that sits within the financial institution, such as guaranteed future value, where you've got an options of financing the vehicle over a shorter period of time. And then at the end of term, let's say after 3 years, you can take the vehicle back. And in most cases, if you look at what we've got in South Africa, you might have two or three options where you can either go and return the vehicle and tell the dealer that I don't want the car. And if they do the assessment and there's no penalties, it's okay, it's fine. Or you can go and say, listen, I love the car so much, I actually want to keep it. And then they will do the remaining years. Or you can go and say, listen, I saw the new one, I want to get into the new one. And you can. So there are other options. The main thing here, Maya, is when you're getting into such a big investment, just make sure that you do your research properly, and make sure that it's not going to impact you negatively when it comes to your finances and future.
Yeah, and I think one must also define the difference between a lease agreement and the rent to buy. So this is my understanding. I don't know, Gabby, this is what you're talking about, but there's the leases, and I think leasing is a very interesting one if you're the sort of person who wants a new car every 3 years. Then it actually works, leasing. But I'm not pro it, because it just means you're constantly paying for a car. But there are pros and cons to that. But I am concerned about what I would call the sort of non-mainstream rent to buy, which is really aimed at people who don't have good credit records and who can't get finance. And they create the rent, they call it rent instead of a credit agreement. And it's a way of getting around it. And I think you end up paying a lot of money. I think you do need to know what you're dealing with. Yeah. I want to ask, I've got more questions coming in, but there's a question I want to ask, because I know this is another one I get quite frequently. What can I do if I cannot afford my car repayments? And this, it may happen, and I'll give you two scenarios. One is where obviously you can trade out of it and all the rest, but what if you land up with a balloon you have a balloon payment, or you have a shortfall that you have to settle and you can't afford to do it? You've lost your job, your income decimated, which is very real right now. Because a lot of people say, can't I just give my keys back to the bank? That is a perception.
Yeah. If regular payments are not possible, again, I'll go to the same things, and I'm gonna say this because we find that in most cases customers wait until it's too late to engage with their financial institution that gave them the loan for the vehicle. So the best thing to do is that if you're finding that it's becoming a bit difficult, go to the bank and make arrangements, because there's a few options that can be there for you. There is an option of surrendering your vehicle, is also an option. However, it will also have an effect on your credit score, because you still need to pay for that vehicle even if you surrender it, or whatever balance is left if it was to be auctions. You can also consider selling your car yourself through a reputable dealer or through a private sale. If you're going to do private sale, always consider doing it through, we've got what you call the dealers that we've approved to help in facilitating private sale, so that you don't get ripped off in the process as well. So just consider that. And with us, for example, as Absa Vehicle Asset Finance, we have established a platform called Help You Sell, which is a secure marketplace for dealers and sellers, and where you can achieve the best price for your vehicle if you really can't afford the vehicle anymore. So what I'm trying to paint here is that there are options, but the key here is always act on it earlier rather than later, because the later you wait and then you miss one or two installments, it's going to become very difficult to get out of it, and you know that you're just going to incur more and more interest unnecessarily. So rather, if you can see the storm coming, speak to your financial institution earlier.
That is, I can't even begin to reiterate what you've said, because I pick this up all the time. People just think, I'm not going to pay for a couple of months, I'll sort it out. And suddenly it's a disaster. Whereas had they just gone right at the beginning and said, what action do I need to take now? There would be a totally different situation. So please don't. It is hard out there. It's tough right now. Go and speak to the bank sooner rather than later. I mean, I've definitely seen the banks are, they have to be considered, they have to consider it, because it's the reality at the moment. But it's whenever I have a problem, whenever people come to the big problem, it's always because they didn't inform the bank. So that's really key. Just somebody asking, so maybe I think your answer is going to be like, please drop us your details so we can solve the problem. But what happens with the extra money remaining in the account after the final payment? The last installment was less than the monthly debit order, and Absa is quiet about it, despite me asking for a refund. So I think, I'll get your details, drop me your details, and
let's do that. Then you can send it directly to me, and then I'll deal with it. Yeah.
Absolutely, great. Can one negotiate a rate when refinancing a balloon payment?
Yeah, no, not really. It's not common. So in most cases, remember that your contract was already signed prior, so with the specific rate that you had signed when you did the deal. So you're not getting into a brand new contract. It's the same deal that you continue with. So we don't necessarily get into the interest rate stuff. You just work on the terms in terms of how long do you want us to continue the finance. I think that's a better way of looking at it, Maya.
And I suppose, you could, in theory, go and take out a personal loan and settle the balloon, but it's unlikely that your personal loan would be at a lower interest rate than the car finance. Yeah, so probably not. And there's another good question, which is best when paying extra, reducing the term or the installment? And that is actually a very good question, because you are able to negotiate either. You could say, I'm paying an extra, please shorten the term, or I'm paying an extra, please reduce my installment. Which is better? I suppose it depends on the outcome you want.
That's what I wanted to say. So it's going to depend on what you want out of it. Because if you want your installment to be lower because you feel that maybe you're a bit pressed financially, you can do that. But if you just want to finish off the car much quicker and you want to continue the same term, because same installment, because there will also, now you've got shorter term that they've reduced and you're still paying the same amount that you would have been paid on longer term, so which could actually help you in terms of finishing off the car quicker. So it will always depend on what's the actual outcome you want out of it. Different people have got different reasons for doing it, but you do find that in most cases you find people that will do that just to reduce the installment. And they might do that on an ongoing basis up until the end of their term. Well, they won't even reach the long term of the vehicle, but they'll do it ongoing just to reduce the installment. So it's always dependent on what you want.
And the other thing from what I understand, is that you could make your advance payments and not do either, not reduce installments or reduce term, but just keep it almost as an extra funding. And then if during your repayment period you hit a bump and you can't meet your repayments, you can actually draw from that advance. Am I right?
Yeah, you can, yeah.
Not withdraw, as in you can't take it out, but you can use that to meet your repayments. So sometimes that could be that does give you a little bit of a buffer. Just another option. Still reducing your interest, because you're not paying interest on the amount. It's an interest offset.
Yeah.
Again, I did do a very long article on it, so maybe I'll post that up for you. But there are a lot of different ways to skin a cat when it comes to additional payments. Rowan asked, what's the best option, fixed or linked rate? Do you offer fixed? Most car finance is fixed, isn't it?
So we give you options. You've got an option of doing fixed or linked. Obviously, if you're looking at linked rate, it's variable, right? So every time the interest rate goes up and down, you will get impacted. And you might find that a linked rate is much more. It's less than fixed rate in terms of what you can get out of it. But just bear in mind that as the Reserve Bank changes the repo rate, you are bound to get impacted by that. With a fixed rate, the advantage of it is that you know exactly what you're paying. It doesn't matter what happens with the rates. You know exactly what you're paying. So in most cases, you'll find that you can budget better because it won't change, right? It will remain the same all the way. Whilst with linked rate, it can vary depending on what the rate is. If it goes down, it's a big advantage for you, right? Because then you're going to pay less. But if it goes up, it's the opposite. Then you're going to be sitting with a high installment that you would have expected. We do find some areas of our business, such as our taxi finance business, where we normally the client would prefer a fixed rate because they want to know exactly what they're paying for the duration of the vehicle. They don't want to see any deviations in terms of the installment, and it just makes it easier for them to manage their cash flows. So depending on what you want as an individual, it actually works better. But just note that with variable or linked rate, it varies depending on what happens with the repo rates.
And it is a difficult one. I mean, home loans are the same. We see the same question with home loans. But generally speaking, you pay, if you're for fixed, you'll pay slightly higher than a variable rate right from the beginning. It's obviously the bank's factoring in future rate hikes. So it's one of those. I mean, I always think if you can pay in a little, if you can have a variable but pay in a little bit extra, then you can absorb any future rates. That would probably be a really good way of doing it. But certainly, I know there were a lot of people very upset because they were in fixed rate agreements, and then we had this massive cut in interest rates, and then they paid those higher interest rates. I think probably where we are in the economic cycle in terms of interest rates, we're probably going to see more likely increase in interest rates right now. So yeah, it's a difficult one to answer. I mean, you got to make an individual choice on that. Yeah.
And Maya, what you've just mentioned is key, right? When you mentioned around the people that had fixed rate before and then it were a big drop, and that's the decision that you need to take after, and you need to consider things like those. And that's why I said the pros and cons of linked rate. It's that the cons will be that if it goes extremely low, you're going to be sitting with an extremely low installment or extremely low rate. But if you've got fixed rate, just remember that if it remains the same and you're paying the same amount, it also helps in towards your payment of the vehicle much quicker because you're actually paying more, or you are paying versus the person that's paying a variable rate and stuff. So those are the pros and cons, unfortunately. And we did have a few of those kind of calls when the interest rate dropped.
Yes, they were writing to me too. Khomutso asked, can you change your interest rate during the contract because she now has a better credit profile? Now, I know you can do that on your home loan. I don't know. Can you do it on your car finance? You say, well, my credit rate's improved, my affordability is improved.
No, not really. Because with home loan is a bit of a longer term. This is a short term kind of contract, and is based on that specific time when you're purchasing that vehicle, and we do your ratings based on that scorecard. And obviously we do know that it can improve, but you cannot change it all the time whether it goes up, because you can just imagine that when your scorecard improves, you go change it to better, and then it goes worse. All of a sudden now we must come back and say to you, okay, listen, maybe pay us more, etc. So normally we don't find situations where we have to review interest rates for the duration of the vehicle.
Yeah, actually, it's a good point. And then nobody comes back to you when your credit score deteriorates and says you have to pay us more. So I suppose that's fair enough. Unless there's any other questions, I wanted to just ask you really just, what are the key kind of advice that you would give to people when it comes to financing their cars? You deal with people, what some of the issues are there. What would be your kind of key points?
I would say that buying a vehicle, it's one of the most exciting moments for everybody. I think everybody wants that comfort of having their own car. Number one, if you're buying a brand new car, that smell of a new car always gets everybody excited. If it's your first car, it's a big achievement. You're actually getting into a phase where you can say you are independent. But with all that excitement, let's say people need to start becoming grounded when they're actually starting to think about how do you finance that vehicle, because with all that excitement, you find that most customers end up getting into contracts which are not ideal for their own situations, and they might be able to carry it over for a couple of months, but once it starts getting tough, it becomes very tough on them, and now you're not enjoying your vehicle anymore because of finance. Where else, if you actually put your mind into it before you actually got into that car, around what finance are you getting. Make sure that you've got the right value-added product, as mentioned, like credit life, which is quite key, considering where we are currently in our economy and the instability that we're seeing. Make sure that you've got enough money to cover your insurance, because that's another thing that we're seeing, that most clients will have an insurance just to get vehicle delivered, but once they leave, they cancel the insurance. And the sad part is that then you get into an accident. Now you've got a big problem. You can imagine if you've got a debt of 500,000 rand and you don't have insurance, and then you're sitting with that debt and you don't have a car as well, or you're sitting with a car that is not even roadworthy afterwards. So it's always important that, as much as you are excited about the vehicle when you're purchasing the vehicle, always be or show the same energy and excitement about the finance, so that you make sure that whatever decision that you're taking at that moment on the finance side is going to impact you for 5 years, 6 years, 7 years, depending. So make sure that you're also clear and understand what you're trying to get yourself with when it comes to finance. Then you can enjoy both side of things, and you can still have extra money for your other stuff, and you can even have money for petrol as well. Because I mean, there's nothing worse than buying a car which is Gazla, and then you can't even afford to put petrol in the vehicle because of the decision that you took. So if you have to postpone purchasing a vehicle because of financial constraint, do that. Rather do that, save up for it, put in some deposit money, then go put in some deposit so you've got some leeway in your budget, rather than just jumping into it. Because staying with that car, with that finance that you can afford for a long time, I don't think, even when you're trying to put an acceleration on that car, all you'll be thinking about is just, I've got some debt that I need to worry about. So think about that and be very cautious when you're doing it.
I think that thrill of that new car dies very quickly when you suddenly can't meet your repayments. So yeah, I do see we had a question again, and I think we have answered it largely, which is around restructuring to make sure that you pay off the balloon. And I think we have said that it is absolutely possible if you have financing through Absa, because you can actually just increase those installments and allocate that to the balloon. But even if you're not, even if you're with another finance house, by increasing your installment, you pay your car off sooner, so that you can continue. You can continue to make those the installments towards the balloon once the primary debt is paid. If that makes sense. So yes, absolutely. You can do that. But I think Fulu, you said that you can actually at Absa go and ask to completely restructure the deal. So you could go back and say, actually, I want to completely restructure the deal and remove the balloon payment and increase my installments. You can actually go and do that.
You can, yeah. You can.
Okay, brilliant. Okay, I think that was a really good session. And I know everybody needs to go off and get dinner now, so we won't keep everybody. You, but I really appreciate your time. And as you can see, balloon payments are definitely one of the biggest questions. I get them all the time. And I think if I had one piece of advice, it's that balloon payment people just don't realize. And I do think, whenever I look at the adverts, for just 5,000 Rand a month, you can have this car. Always read the fine print, because I can assure you the fine print reads over 72 months with a 30% balloon payment. So, you've really got to be careful and do your own maths. And a dealer is going to upgrade you. A dealer is going to constantly want to sell you a bigger car. That's their job. That's what they do. And you've got to walk in there knowing your numbers and your affordability and stick to it. So thank you.
That's it.
Thank you, brilliant. Well, thank you, and thanks very much. And, please keep posting your questions, and we'll also be sharing the articles, and we'll share this video, so you will be able to listen to it again if you missed some of it. So thank you to everybody.
Thank you very much, Maya.